our 9-month 2022 financial results earnings call. And this is the third earnings call we are conducting this year after ACWA Power became listed. And together with me today, I have Mr. Abdul Hamid Al Muhaidib, who is sitting next to me, and he is the CFO of ACWA Power Group. And we also have Mr. Paddy Padmanathan, who's the Vice Chairman and the CEO of ACWA Power Group, and he's joining us from Cairo, where he's on a business trip. Hi, Paddy. As the operator kindly mentioned, we will be covering the quarter, which we just finished, as well as the 9 months results. We have our prepared remarks, which we will follow through a presentation. Let me give you a few reminders before I pass the word to Paddy. First one is all the materials are available on our website, as well as Tadawul's website, which include an investor report, which also includes a management discussion and analysis of the financial results which accompany the financial statements. Secondly, all of you know we will be using some forward-looking statements. So you all know that you are going to take them with a sort of grain. And there's a disclaimer for the forward-looking statements that we will be using. Without further ado, let me pass the word to Paddy. Paddy, it's all over to you.
Thank you. Thank you. Good day to all of you. Once again, thank you for the interest in joining us this afternoon. Let me open straight away with the highlights of the past quarter and a kind of few pointers on the outlook for the next quarter. So in the third quarter, we are pleased to have delivered robust financial results, where operating profit 11% ahead of last year and adjusted net profit 7% ahead of last year. Now, during the third quarter, we also signed a share purchase agreement to bring China Silk Road Fund as a co-investor for 49% in the 1.5 gigawatt Sidaria CCGT project in Uzbekistan. That's a 3.75 billion SAR investment. We also signed the heads of terms in Uzbekistan for the 9 billion SAR 1.5 gigawatt wind project. And I'm delighted to say that during that quarter also, we brought fully online the 681,000 or 681.9 thousand cubic meter a day Naka IWPP in UAE. That's a reverse osmosis plant. And in the fourth quarter, we have already brought online the second 300 megawatt group of PV capacity at Shua Energy 3. This is the phase 5 of MBR Solar Park in Dubai. So now we have 600 megawatts of the 900 megawatt full capacity dispatching. We achieved financial close for Shuaiba 3 IWP. That's 2.4 billion non-recourse project finance debt. And we completed refinancing of Shuaiba IWPP as part of the conversion process. This is the oil-fired power generation and desalinated water production plant, our first development way back in 2005 to 2009. So this plant is getting phased out and is getting converted to a reverse osmosis plant, Shuaiba 3, which will save 9 million tons of CO2 emission per year once completed. We have completed the refinancing of this. And as sort of we roll into November and into December, we expect to achieve a few more financial closes. And we also expect to be signing the power purchase agreement for the next projects in the PIF Saudi pipeline, the framework contract that we have to develop 70% of Saudi Arabia's renewable energy target for 2030. And the next project is also a mega one at over 2 gigawatts of PV capacity. So that's quite a lot of activity. But realistically, and as you all know, within the framework of sort of unprecedented global geopolitical tensions and significant economic stresses, there is no end in sight and which are nowhere getting better. For the So we are living through a persistent higher cost and interest rate environment, even while we are grappling to still recover fully from the COVID-19 pandemic. And this is exaggerated, of course, this is sort of, seriously exaggerated by the continuing war, exerting more stress and prolonging the supply-demand imbalance. And quite frankly, this is affecting projects in construction. It is most affecting our EPC contractors who really have to operate in this very stressful environment, putting a lot of stress on supply chains and on time for construction. It is also impacting some of our advanced development projects. Look, I think it's we've got to be very straightforward and explain that we are experiencing cost overruns, but they are within our project contingencies, and we are able to continue to manage the situation and work with the trusted relationships that we have built with our EPC construction partners and our off-takers in order to keep these projects on track. And we continue to remind ourselves that we need to remain very much focused at completing these projects and keep developing new projects at scale and keep driving our growth. But it's our resilient business model supported by strong financial relationships, governmental relationships, contractual relationships that we have built up over the last 2 decades that allows us to sort of manage these stresses and steer through these challenges. And I am reasonably confident of our continuing positive momentum in driving growth and building up our scale in power, water, and now in green hydrogen, with financial closes and new bids already lined up, rapidly lining up and lined up for the next year and beyond. So just thinking about the future in terms of new horizons, green hydrogen is a hive of activity. We're making solid progress at the NEOM Green Hydrogen Company, where we are working towards achieving financial close by the end of this year. The teams are working very hard. But at the same time, we have now, with all the confidence of, all the learnings and the confidence of having taken this project into construction and racing towards financial close, we have started to work on fairly significant projects, having executed MOUs in Oman, South Africa, and Egypt. And in Senegal, we have signed a memorandum of understanding to develop a 300,000 cubic meter a day seawater reverse osmosis desalination facility, and also a 160 megawatt combined cycle gas-fired power plant. The reverse osmosis plant will be sited in Grand Côte, located northeast of the capital, Dakar. And once completed, this will be the largest desalination plant in sub-Saharan Africa. Sustainable infrastructure financing MOU with EBRD is quite a landmark achievement in terms of consolidating an extremely well-established relationship with EBRD, who are a very reliable financial partner who have worked with us over a decade now. And this MOU that we signed last week on the sidelines of the Saudi Future Financing Initiative is focused at specific cooperation in the next 5 years on development in green energy, renewables, hydrogen, and green desalination across the operating theater where we overlap, that is Central Asia and North Africa. And another sort of noteworthy achievement, if you like, is that we have started to, we generate a lot of carbon credits, and we have been trading carbon credits through in the international market through agents who function as middlemen. But we're very happy to see that the Saudi Sovereign Wealth Fund, PIF, has established a MENA voluntary carbon market platform. And we were one of 5 partners who have already signed up to that platform. And in fact, entered the first trades that were launched last week on the sidelines of FII. And all of this will accelerate efforts that the kingdom has to achieve net zero by 2060. That's kind of introductory. I'm sure you're very keen to get into the detail. Let me pass you over to Abdul Hamid, who will now go through the details of all the activities during the last quarter and as we look forward to the new one, next quarter.
Thank you very much, Fadi. Yeah, good afternoon, everyone. Thank you very much for joining us today. Just as a quick reflection for those who are joining us for the first time, this is a slide presenting the key financial metrics that we will be covering this evening. We have 5 metrics that focus on measuring the financial health of the organization. The operating income before any impairment losses and other expenses. So in this specific metrics, we will be covering the operating income of the last 9 months as against the 9 months ending September 2021. We'll go through the details, what has been the drivers behind each variable change within these inputs. The second one is the adjusted profit, and this is where we will take the net profit to an adjustment to make sure that we can show you an apple-to-apple comparison between the net income if you adjust it from any non-routine and non-operational items, and to give you a flavor of how does the adjusted income, aside from the net income, is presented within the 9-month period. We also usually present on the financial metrics on a semi-annual basis the parent operating cash flow of the company, and then we also present the total parent net leverage, where we also finally have the POCF divided by the parent net leverage to get the ratio. This is usually presented in a semi-annual basis, so all these data are actually presented last June and now available as well in our website. Within the course of today, we'll be focusing mainly on the first 2 items. So moving to the operating income, we have in the large nature 1.8 billion riyal this quarter, and this is a comparison of almost 11% increase from the same period of last year, which was concluded at around 1.6 billion Saudi riyal. If you take the distribution and the main drivers for changes, big contributor is actually the new project that Fadi has already covered as assets came into operation. So around 450 million came from these assets, and the beauty of that increase actually it came from different technologies and also different from both from the power side and the water side. So looking at that, we had actually aside from Jizan, we had also 2 water projects that have contributed to this increase in UAE, mainly Tawila and Uruguay project. We have also 2 renewable projects that has contributed to this, which is Noor Energy and Shua Energy 3. All of them are actually came into operation within the last 9 months. Then the development cost, there is an upside of saving compared to the same period of last year, and this is mainly where we had significant development costs last year for specific projects, and when you do the analysis and comparison within this year, there was an upside of 85 million Saudi riyal. Another increase is related to the other operating income, and this is has been highlighted during the first 2 quarters of this year. We had a liquidated damages bond that has been bought in one specific project due to non-performance of the EPC contractor, and we have other operating income that contributed to the overall 84 million Saudi riyal. The final one, which is also a large negative contributor, is actually due to force outages that we had been suffering from during the course of the year. Unfortunately, this year we had several force outages. that took longer than usual, I would say. This has been highlighted also earlier this year in our annual report. For example, we had in Morocco NUC 2 and NUC 3 CSP project that has been in force outages longer than usual. We had also 2 other assets in Saudi where the contribution was also from a force outage longer than expected. The good news here is that out of the 4 major outages, 3 are back into full operation. And the last one, we are also expecting it to come into operation by next month. So with that, all the force outages that we are suffering from will be coming back into operation before the end of the year, inshallah. Moving from the operating income to the net income, this analysis will present the 9 months. So first we'll go actually to the reported net income. Alhamdulillah, this year was actually a remarkable increase compared to the same period of last year. So from 420 million Saudi riyal to around 883 million Saudi riyal, almost 110% increase. On that, we have already explained the first component, which was the 189 million in the operating income. Going back to the second pillar, which was the other income, this was around 203 million. This was mainly contributed by 2 elements. The first element is that the deposit rates and also the cash balance that has been on the company for the last 9 months has contributed a good financial income into this element. The second one is a reversal on a provision we had earlier on the call for Hassian IPP project. The last one, or the last increase, it's around 282 million Saudi riyal related to the impairment process and others. And this one is related to a specific project that has been affected during the last year. Also, one important player here is that the IPO grant expense, or the employer IPO grant that has been there last year, it was a one-off, and this is the big difference when you see the increase for this year. There is a negative impact of 187 that is mainly driven by the deferred tax impact. And this was actually due to devaluation of the Moroccan dirham against US dollar, which continue to be impacting us. We have been reporting that in the Q1 and Q2 of this year. And this is the main driver there, as we have 4 to 5 assets in Morocco where it has been impacted with this note. This brings us to the 883 million Saudi riyal as a reported net income. When we come to the adjusted net income, and this is actually why we always believe that it is a very important and relevant for us to share, is if we take the adjustments out and the one-off non-routine items off, you will end up with a 7% increase on this period. This year we have done only 2 adjustments to the net profit. One is related to Kerikere, because we had earlier provisioned the full impact of Kerikere, and the asset is performing well, and they are paying the O&M contractor, based on which we had reversed the 12 billion on the O&M side. On Vietnam project, we have continued the divestment. We have earlier actually provisioned a larger amount, and as we concluded the project, there is a positive saving on that provision, based on which in the adjusted net profit, we are also eliminating the 14 million Saudi riyal. Overall, that brings us to 858 million Saudi riyal as a bottom line for the adjusted net profits for this period. With that, we would like to highlight the significant matters that has arisen during this quarter. Fadi has already covered remarkable divestment of 49% of Sidaria CCGT project. This is now subject to closure of CPs, and we are expecting by the year end we'll complete this transaction. This is a transaction that is being done with the Silk Road Fund from China. Also, during this period, we have prepaid an outstanding loan we have with the Silk Road Fund. This is a fund, or this is a facility that we may primarily utilize and kept for the intention of equity contribution in specific assets for ACWA Power. However, as it's going to be retired next year, based on our assessment, we have decided to retire it as there is no upcoming utilization for this facility. Extended force outages, I have already covered those three, and our target to bring it back hopefully by the end of December. The remaining three assets has already came back to operation. With that, I conclude the finance update, and we'll open it up for the Q&As. Thank you very much.
Thank you. If you wish to ask a question, please use the raise hand button found on your Zoom toolbar. Alternatively, you can use the Q&A chat box to submit a question. And if you have joined us on the phone, please press star followed by 1 on your telephone keypads. As a reminder, that's the raise hand icon, the Q&A chat box, or press star 1 on your telephone keypads. We do have a question from Taha Safedin from JP Morgan. Please go ahead.
Yes, hi, good afternoon, gentlemen. Thank you very much for the call. This is Tahir from JP Morgan. Two questions, if I may. The first one is just on the overall guidance. I know maybe we don't need to look at this business on a quarterly basis, but at the time of the IPO, you highlighted doubling of the operating income between 2020 and 2023. So I just want to understand if there's any update to that guidance. That's my first question. And the second question, maybe Paddy, you mentioned the PIF expect some signing of the framework quite soon. I think on this point, are you concerned about the delays on that? Why has it been taking time? That's my first part. And the second part, how significant could we expect?
We lost you, Taha.
So if you can just shed some more color.
Sorry, can you just repeat that last on PIF framework contract? So how concerned am I of the space at which it's being done, and what was the second part? We lost you.
No, sorry. Yeah. So the first one is just on the delays. Is there anything wrong? Is that just if you can comment on why has it taken so much time? And the second part, assuming we start getting these projects coming through, what magnitude we're talking about in terms of capacity and maybe potentially timeline just to see this coming through.
Yeah. Okay. Okay. Let me answer the second, and I'll pass the first question to Abdul Hamid. So on PIF framework contract that we have, contract for that 70% program. So first of all, please understand the framework contract is to deliver a certain capacity, at least a certain capacity by 2030. So it's over the next 8 years. Okay, it's human nature to think that then therefore you take the capacity and divide it by 8 and there, voila, it will be done. But that in reality, in real life, that's not the way it happens. So what has happened is that areas had to be allocated, and they were already identified where the plants were going to go, but then making sure that grid connections are in place, the infrastructure is in place. So there's been quite a bit of preparatory work, and also getting to an alignment with the grid operator and the dispatchers in terms of scheduling priorities at the different locations. So all of that has taken quite a bit of time. Okay, cut a long story short, though, we have gone into construction on the first project. We are now about to go into to sign the PPA and going to construction definitely in 2023 into the second and possibly the third one. And as always, the way these things work, they start off slow, and then ramp up. One of the other points I want to emphasize is that the objective has always been, if the kingdom is going to procure, and the kingdom is procuring a massive amount of renewable energy. I mean, these numbers are world scale sort of numbers. The kingdom should also be working to localize industrial capacity, technology in the kingdom. So wind turbines, PV assembly lines, and then working all the way back even to making silicon. So PIF in parallel, but that's not our business. Our business is to develop power generation projects and dispatch reliable energy at the lowest possible cost. So, but PIF has been very much focused on that objective as well, and has been working towards making sure that that gets built in Saudi Arabia in parallel. So there is a temptation to say that, understandably, that look, okay, let's get on with projects. We're not going to slow them down, but at the same time, if we kind of build everything in the first week, all that industrial capacity is going to come online in order to then expand. So there is a case of phasing in a way that the system can take, and the industrial capacity gets delivered and gets aligned. So all in all, we're not, we're from the private sector, so we want it all done next week, of course. But I mean, that's not realistic in reality. So we're comfortable. We're comfortable. There's a lot of engagement. We are working. We have a reasonable visibility, and the good news is the projects are starting to come. So I don't see any particular issue with this at this time.
Yeah.
Thank
you.
Okay.
Yeah, thank you. But I would like to also add on this specific point. Look, on the PIF pipeline, we have already there 1,500 megawatt under advanced construction. In fact, I was having a call yesterday with the team. The first small lot of the PV panels there already generating power. So progress very well, and it is being delivered on stages. Another 2 gigawatt of PIF transaction. It is under very advanced development stage, which is expected to be closed off soon. And the remaining of the pipeline will be coming, as clearly mentioned by Paddy. I think if you look at what has happened in the last 2 years when it comes to the supply chain issues, COVID-19, nobody was expecting that at all, which definitely affected the timeline. 2 years delay on the overall delivery should not impact the overall program. I think the most important thing is that you see the program coming, and there is a sequence of it, and this is what we are actually seeing. On the operating income point that you have mentioned, if you look at where we have reached today, which is 1.8 billion Saudi riyal, 11% increase from last year in 9 months. Significant increase, despite the fact that, as we highlighted, 4 large assets are actually under forced outage. This is also aside from other small outages that has happened in the project. This year, from myself, I think it's a challenging operating year. However, we have still demonstrated that we will able to deliver 11% increase. So with that, I think I remain actually optimistic about the operating fleet that we have as an organization. Yes, we are affected by these 4 outages. Yes, there is some projects are supposed to complete the construction and switch to operation, but it will not happen this year. But overall, I believe that we will be delivering a very healthy operating income by the year end.
I would like to add one point on the Saudi energy transition, if you allow me. We all keep focusing on PIF and 42 gigawatts in the pipeline, but there is another 30%, which is a significant amount. And it's through the Ministry of Energy, and it used to be called REPRO, and now it is being called National Renewable Energy Program.
Welcome to your conference call. After the following tone, you will be connected to the other participants.
I hope you're still hearing me, Shafraz. So what I'm saying is there is quite a chunk of thing happening in that 30% as well. Already more than 6 gigawatt has been tendered. Just 2 weeks ago, 3.3 gigawatts of round 4 has been announced and to be tendered. And as ACWA Power, from the first 3 batches, we've already got into our umbrella at almost 2 gigawatts. So I just wanted to mention that it's the Saudi transition is not the PIF, it's not only the PIF pipeline, but there is another leg, and which is moving actually, relatively speaking, faster than the PIF pipeline.
I hope, Taha, you get the full feedback, because there was one person dropped and came back on that time.
Okay. I'm not sure if we are being heard. Terry, ask for Terry.
Yes, you
Terry,
are.
Okay.
Apologies.
Right.
It seems that Taha has disconnected from the call. So I'll move on to the next question, which is a written question. So ACWA and Egypt's NREA and EETC signed an MOU to build a 10 gigawatt wind farm in Egypt. Has the land for this been earmarked? All of Egypt's current wind capacity is on the Gulf of Suez. Will that likely be the location? Is there a timeline at all for such a huge project? When could startup happen in the project if the project is ratified? And what sort of level of financing would be needed for a project of this size?
Okay, let me pick it up, and my colleagues can add if they want. So at this stage, what we have done is entered into we have already an established business in Egypt. We have got operating assets, and we've got assets that are going into construction. So we've got so Egyptian government, we're very familiar with the Egyptian government's ambitious renewable energy program and targets. And we are already working with NREA, sorry. And so it is in that context, we have entered into this so it is a memorandum of understanding that sets out the ambition and the target. And the target is 10 gigawatts of wind. NREA has identified all the land where optimum resources are available and the grid capacity exists to evacuate energy generated. So our first job is to be working with NREA to locate the sites that will be applied to this specific framework. And once we have done that, we will then develop the specific projects and the timeline to phase in with their dispatch needs and the ability for the grid to be able to absorb this along with all the other projects that they're developing. So, cut a long story short, it's a working answer to all your questions in here is work in progress. It's very early stage, but there is a very definitive partnership between us and NREA in order to realize this ambitious 10 gigawatt program. So that's what this MOU sets out.
Thank you. Our next question comes from Najmal Hassanein from Morgan Stanley. Please go ahead. Your line is open.
Yes, hi, can you hear me?
Yeah, now we can.
Yes, now we can.
Okay, great. Great. Thank you very much for the call. 2 questions. First one, if you can please share the water and power plant availability in third and second quarter separately. And the second question is kind of more general. With the higher interest rates and the inflationary impact that we are seeing across the board, what is the impact you're seeing on your plant costs? I know it's kind of a broad question, but if any guidance you can provide there, and flow through impact on your end customers and their appetite to move forward with the announced projects.
Okay, let me deal with the second one, and then Abdul Hamid can pick up the first one. So on the second one, look, it's how long is a piece of string, but at the same time, a kind of broad guidance at the moment, or what we are seeing, is in the order of as much as possibly 30 to 40%. Okay, this is not just capex, but the combination of capex as well as rising financing costs in this capital-intensive business. So now, obviously, in the new projects that, so, you know, if somebody, in very simple terms, what that means is that if there was a PV project on which there was a tender last year, this time last year, that delivered a 2 cent per kilowatt hour tariff, if that project was tendered today, our sort of, you know, broad estimate would be that we wouldn't be surprised to see as much as a 40% increase in that 2 cent tariff. So that, you know, yeah, I think that's about as far as I can go with the guessing game that I'm playing, because it is all very site specific, technology specific, supply chain specific, and also right now, as much as it's rampant inflation, it's all up and down. Already, for example, we saw panel prices, solar panel, PV panel prices ramping up very fast, but now we're starting to see them starting to drop off, which is absolutely what we expected, because enormous amount of capacity is getting built. You know, this is all boom bust cycles. This is exactly what happens. You know, everything, you go into short supply, and then more capacity comes online, and then there's a lot of surplus, and then it, you know, come down. So anyway, so that's about as much as I can say on that. In terms of the appetite that we are seeing from our clients with regard to projects that are already in the pipeline, that we are already working on, do they want us to slow it down? Absolutely not. What we are seeing in every conversation we have right across the markets in which you operate, how much more renewable energy can you get into my system faster? For a very simple reason. 75% of the cost of fossil fuel-based energy generation is fuel. So even if you have a gas-fired power plant or a coal-fired power plant that has already been built or is being built right now, it's going to cost you 75% more on tariff because of the, sorry, not 75% of the tariff is going to have to be escalated to the increased energy cost. Well, you know how much energy has increased better than me, the fuel. So everybody knows that the fossil fuel alternative is a hell of a lot more expensive than the increase of renewable energy resulting from the current inflation and interest rate environment. So that's very simple reason why everybody is after, quite apart from the fact that everybody is much more acutely alert of their carbon emission reduction targets, and also very alert to the fact that as fast as possible, if they can localize as much as possible, they're better off in managing their future energy supply demand balances, and taking imported fossil fuels out of the system as fast as possible and replacing it with the sun shines on top of their land, and the wind that blows on their land is the best way forward. So, and we are seeing that. And that is why you will see we are very confident of our growth targets, and you'll see them quarter after quarter being realized through achievements in financial close and going into construction. Abdul Hamid, over to you on the numbers that there are.
Thank you, Paddy. Yeah, so looking at the numbers for the availability, this year, 9 months to date, we had almost 87.3% in terms of power availability. If you compare it to the exact same period of last year. Last year was around 86. However, our target was 89.9 for the same period of 9 months. On the water, it was significantly better. We had around 96% total availability for the last 9 months of this period. And our target was lower than that. So actually, it was a good improvement in the water side. Same period last year was almost the same, 96% as well. So this year is 96.3. Last year was 96.
Is it possible to get a quarterly breakdown?
Yeah. Okay. So the quarterly breakdown for Q3 is around for this year is around 90.8, and for the power side, and for the water side is 97.2. Against, if you want to look at Q3 of last year, it was 93.9 for the power side and 95.5 on the water side.
Thank you very much. That's very appreciated.
Thank you.
As a reminder, if you would like to ask a question, please use the raise hand button, which is found on your Zoom toolbar. Alternatively, you can use the Q&A chat box. And if you have joined us on the phone, please press star followed by 1. We currently have no further registered questions.
Okay, Terry, I think we can call it a day. Thank you very much for your help, and everybody who has participated, thank you very much for being with us today. If you end up having more questions, as usual, please reach out to us, and we will get back to you as soon as we can, which is usually a very quick turnaround time. And again, thank you very much for being with us.
Thank you. Thank you very much.
Thank you.
Thank you, Terry.
This concludes today's webinar. Thank you all for joining. You may now disconnect from the call.